Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, here we are the last day in August 31, and the markets are still correcting. It's the equity markets. I want to talk about just a few of the things we're looking at. Now, last Monday was kind of a big crash in the markets, and that's thus far has pretty much marked the bottom of the equity markets thus far. At least that's what it looks like. So what we're doing is waiting for a follow-through day. The importance of a follow-through day is that tells us that institutional money stepping back into the market. And the follow-through day occurs about 4 days after we think we marked the bottom, and the indexes rise, whether it be the NASDAQ or the S&P, about 1.2 to 1.4% on greater volume than the day before. Now, last week we had some bounces and some good rallies, except it didn't quite qualify as a follow-through day. Now, the significance of the follow-through day is every single stock rally starts with a follow-through day. No matter when you look through the history of the markets. However, one needs to be aware that not every follow-through day guarantees you a successful rally, so just keep that in mind. So one of the things we also want to look at is the levels. So the S&P right now is, it's probably going to bounce around somewhere between 2,000 to 1867, and its 200-day moving average is at 2075, so that would be resistance up around there if it did get up around there. On the NASDAQ, we'll probably bounce around somewhere between 48 to 4,600. Last Monday, we got the low at about 42.92. And of course, the 200-day above that is $4,900 level. So really wide ranges. Now, here's one reason you need to keep an open mind. Everybody and every technician, including myself, is of the mindset that the market has to retest that low, retest those lows that we made last Monday. And that's fairly true if you look back. Most situations when we had big market crashes, that is indeed what happens, but it doesn't happen all the time. So that's why, again, you got to keep an open mind, look for that follow-through day, and continue to build watch lists of stocks that are holding up relatively strong or stocks that have some outstanding fundamentals. So for instance, if I was going to make a list of fundamental stocks, I would look at some like Gilead Sciences, GILD, or Celgene, CELG, Valiant Pharmaceuticals, VRX, Allergan, AGN. Those are some very strong stocks that are making a lot of money. Now, if I were to look at stocks that have a high relative strength, meaning they're actually hitting new highs in all this turmoil, that will include stocks like Sucampos, symbol is SCMP. I look at Inogen, INGN, or Huron Therapeutics, HRTX. These are all stocks, promising futures, and they're sort of bucking the trend. And those may be your new leaders if we do get out of this correction. Home builders are doing very well also. You can look at Lanier, D.R. Horton, M.I. Homes, LGIH. All those are hanging in there pretty good as well. So the whole point here is you want to keep an open mind, look for that follow through, watch out, we might retest those lows. There's no telling. However, this is a technical correction, meaning nothing fundamentally has changed. In fact, economic news keeps getting better and better. It is this slow growth that we do keep seeing. However, corporate profits are record high. We had a GDP report last week that pretty much beat everyone's estimates. So those are just the kind of things to be aware of. So as always, let price and volume be your guide. This is George Tkaczuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.